Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday video is for Wednesday, August 1st, 2012. My name is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. All right, guys, markets are very quiet right now as we await the Federal Reserve decision. I'm going to bring that to you live here, and we'll watch the reaction. We're expecting it in about 7 minutes. So in about 7 minutes, we will see that reaction as we get the word out from the Federal Reserve. And bottom line is this. Right now, when you look at the charts, what have we done the last few days? We've really just gone sideways. I mean, we had that monster rally Thursday and Friday in the markets, and then since then, we've slowly pulled back just a little bit. Today's a little bit of an up day. Yesterday was a little bit of a down day. Previously, it was a flat day on the markets. But ultimately, the pattern here is, believe it or not, bullish. All right, so now again, does that mean, and this is going to be the big question, does that mean we see a little bit of upside off of Bernanke's comments? Now, what are people expecting? Well, ideally, the market's dreaming of Federal Reserve intervention via QE3 or some sort of twist program or some sort of action that's going to pump more drugs into the market. And I liken it to a drug type thing because you have an addict, which is the market, and it's kind of, it starts to get the shakes when there's no QE policy involved. And that's what we've been seeing here, and we saw it before the last twist, and we saw it before QE2 and all that stuff. And the markets, again, are just looking and hoping. And every time you see the Fed not do it, we've seen a sell-off in the markets before it comes back on hopes that it's going to get the drugs. So, I mean, it's very much like that, and you have a kind of a patient here where, the patient's in dire straits, but the question is it better to go cold turkey, which would be rough in the short term, but better in the long term, or is it better to just kind of keep the patient sedated and on the drugs? And that's really what it comes down to. So, again, markets here today, you guys can see this. I mean, the volume's about as light as can be, lighter than yesterday. We're on pace right now. We've only done 58 million on the SPY, but it should pick up dramatically when we get this news out from the Fed. And again, it could be a huge move up, it could be a huge move down, or maybe the market really just says, all right, well, we didn't get QE3, but at the same time, he says he will give it to us, so now we're just going to hold where we are right now and continue to consolidate. Again, technically speaking, the pattern over the last few days is slightly bullish. Short term, the pattern is slightly negative, but I'd go with the bigger pattern overall based on this. Interestingly enough, we have the Federal Reserve decision today. We have the ECB, I believe, tomorrow, and then we have the non-farm payrolls number on Friday. Today, we got the ADP private sector numbers, which came in better than expected. And again, Spider's up about 50 cents on the day. S&P's up 1.5 points. Dow's up 23 points. And NASDAQ is up, or down, check that. NASDAQ is down about 9 points on the day. NASDAQ's a little weaker today because Apple's pulling back. Apple had a monstrous move over the last few days. I mean, just a dramatic, impressive maneuver to the upside off of those earnings miss. So you had that big drop on earnings right here, and then it went sideways for 2 days and then broke out to the upside. And it's negated that whole move down on earnings and then some. And you can see even on the pullbacks today, here's where the stock closed prior to earnings. And since then, we haven't even come in and tested that line. This line right here, between here and here, will be a lot of support. Right, because you have the gap fill right there. You have the pivot high right there as well. So this area is going to be a lot of support. And then right below that, you actually have a gap fill here, which will be a major level of support as well on Apple. Now, ultimately, I think Apple goes down, but in the short term, I wouldn't be surprised if Apple, after a couple pause days, has a little bit more upside to it. You can see here, and I love showing charts like this, guys, because the methodology is just so clear. And by the way, folks, there's a 7-day free trial we offer. We literally will teach you our proprietary methods that you can use on anything. I don't care if you trade Forex stocks, ETFs, or currencies. I mean, obviously that's being Forex and then commodities and all that stuff. I mean, it doesn't matter what you trade. Our methodology and our proprietary techniques are universal to any chart, any time frame. Doesn't matter. It works. 80 to 90% success rate. And this is why we have the best growing membership in the world in terms of a service, because we obviously teach our people. We're not just giving out calls. Now, we'll give out calls as well. Anything I take as a swing trade, I'm posting to my members live, by the way. But overall, it's the methodology. It's the PPT methodology. No, not plunge protection team. This is the PPT methodology, price pattern and time methodology that will literally take you from here till the end of the world and make you money. All right. So in any case, bottom line is here we have a 3-bar surge on Apple. I talked about this to my members yesterday as well. 3-bar surge, 1, 2, 3. So it tells you you're gonna have a little bit of a pullback, and that's why the Nasdaq's a little bit weaker. You have a little weakness in Apple today. You have a little weakness in Amazon down $1.62. Let's take a look at the Amazon daily chart. Amazon's pulling off of that big move up on earnings. By the way, these are inside bars on Amazon. So I think here, if Amazon pulls back to here, this actually could be a little level where it starts to bounce. Maybe if we sell on the Fed, we'll get that move right here, into that today even. Who knows? That level on an Amazon where it's going to start to look attractive is around the 228.75 level. And by the way, just for the record, folks, I think the markets are going to go down sharply, but I'm a little bit in the camp right now that we have a little bit more upside before we see the big sell-off. Okay? So we'll continue to watch that. Google's up about 91 cents today. Baidu's up a couple bucks. Baidu again had those good earnings, which broke it through the moving averages, and then since then it's been pretty solid. Even this is consolidating in a bullish manner. Target most likely is the 200 MA here before it starts to have a bigger pullback on BIDU. JPM is up a little bit today. JPM continues to hover here. You could even make a case that this is consolidating below the 200, below this little pivot top area here. And once this breaks out, you could easily see, you'll have a little resistance at this level here on JPM. But then really, gap fill up here is probably the next big level. Wouldn't that be something if JPM was able to get all the way back to that gap fill? That was the gap fill that was created, the gap down, when they announced that big loss, that trading loss of multiple billions of dollars, that big gap down there. So quite something. So again, resistance here if it breaks through, target 1, target 2 on the upside of JPM. And again, we're about a minute and a half away from the Federal Reserve announcement here, guys. And again, I'll be listening to the announcement, and I'll just report to you. The dollar, again, is upticking a little bit here. And as the dollar upticks, now the interesting thing with the uptick in the dollar here is this is telling us that the market's not expecting QE3. And that's why, essentially, if the dollar's going up, if they were going to do QE3, or if the market expected them to do QE3, then you'd see the dollar coming in. But right now, anyways, with this pop here, here we go, guys. Fed leaves rate unchanged. Fed leaves rate unchanged. Look at the spike down in the market. That's all because of the dollar spiking up. So it's interesting how we're seeing a little sell right into the 200 here initially. Nice little sell. Spiders now looking on the downside here. So we're seeing a little weakness come in. Let's see if this level holds. This is a big level. 200 MA, red line, white line right here. And again, notice the pop in volume too, obviously. But the Fed, again, leaving rates unchanged. Now, can the market rebound on some thoughts of QE3? And we're already starting to bounce. And this is the wildness of these Fed announcements, guys. You just get some wacky moves. Look at the moves all day. We almost had no action. And then all of a sudden, bam, to the downside. And big bounce already. And again, this is why I love Fed days. Because, you just get this type of whippy action. It just makes it fun. Absolutely very, very fun to trade. But spiders, again, are basically back to the flat line of the day. Now we're actually bouncing up. Look at this bounce up. Imagine if we could go positive here. Wouldn't that be something? Because overall, interestingly enough, we have the bullish consolidation pattern. It's just a matter of, can this play out today, or is it more something that's going to play out in the coming days? And that's what I'm curious about. All right, so again, really, the bullish consolidation pattern would hold true unless you take out this gap fill down here. Even if you fell down into this area down here, you'd still have the big up move from 2 consecutive days all the way from down here. And then you have this kind of pattern right here, all right, sloping down. But nonetheless, so far the market's, again, just hovering on the flat line off of Fed. Fed expects to keep exceptionally low rates through at least 2014. All right, we know that. That's the same nonsense. Basically, I'm not seeing any QE3, which is why the markets are selling a little bit here. No specific announcement of QE3. They're still alluding that they're willing to do whatever, but it doesn't look... Fed will continue Operation Twist through the end of the year. Okay, so that's a little bit of new. That's a little new. So the Fed is going to do twist through the end of the year, but that's actually maybe not a good thing. Yeah, it's twist, which is kind of QE3, but it's not what the market. The market would have preferred that. Would have preferred QE full out 3. They're not going to get that, but at least they're getting something. So it's 50-50 here. It's a neutralish. Again, so far we're seeing a little bit of selling on disappointment. Dow is down about 50 points now, so after being up about 20 points before, we're down about 50 points now. Spiders coming down again. Still hovering right around the 200 MA. 200 MA here. Fed saying housing sector remains depressed. We know that. This is nothing new there. Spiders again bouncing. 200 MA is working well, plus the red line, guys. This area is just a lot of support. If the market gets below the red line, then I think it's in a little bit more trouble, and then you could see it move all the way down here. This would probably be a little bit of your next level if it fell below that level. Spiders, again, still holding that. And then, by the way, spiders that basically mirror the S&P 500 for those of you that don't know. But these are your next levels of support. So far, it's been beautiful how it hit the 200, pierced, went to the red line, bounced back up, and now we're kind of just hovering here. Market, again, really on the flat line overall. And remember, folks, this is only one part of the major announcement in the next few days. We have the ECB tomorrow, which will probably be even bigger than the Federal Reserve today, because obviously the ECB, Europe, is the one that's having the big issues. And then the jobs number on Friday should be pretty solid as well. That should be a big deal to the markets. We've seen a lot of disappointments in the jobs number. Markets, again, good sell-off, but I mean, it's not like we're going nuts here. It's not like we're seeing major selling or major buying. I mean, it's just the markets had that one quick sell-off, and now we're just kind of stalling here. In a weird way, I almost get the feeling markets could float back up a little bit just based on the fact that the market's not acting more negatively overall. I'm just trying to see if there's any more headlines, but really nothing that I'm seeing. Let me just take a look at the dollar. And we saw the dollar spike up just before that announcement, too, and that was a leading indicator. So there's your dollar chart, UUP spiking up. And remember, when the dollar goes up, markets go down. So, I mean, you could really just watch the dollar and know what the markets are doing just by looking at the inverse relationship there. Notice how the dollar was just kind of flatlining here, just like the markets were flatlining most of the day as well, until that big spike here. And we are seeing the dollar move a little bit higher, which tells us the markets could be coming back down a little bit. Let's flip back to the SPY. Yep, markets are coming back down. See how that works? Again, you just saw a little uptick on the UUP and the dollar. And the market's right back down. So again, we're only down 20 cents on the market. It kind of looks a lot bigger than it is on the screen, but it's really, again, 20 cents on the spiders is almost nothing. And it really is a minor move. Let me just take a look at Goldman. Goldman selling off a little bit here. A little bit of a downtick, and not a big downtick on Goldman. JP Morgan, big drop into the 200 there, but bounced back pretty nicely. Apple. Yeah, Apple sold and bounced right back here. It's interesting. As long as Apple doesn't close below this line, Apple could actually move up a little bit. But nonetheless, it's still so overbought in recent days that I wouldn't be looking to buy that right now anyways. Let me just continue to scan through here. How's Amazon doing? Amazon, a little bit of a dip on Amazon. Nothing crazy there. Spiders, again, bouncing back off the 200 MA after a little bit of a dip there. So right back above. And it seems like, again, we're hovering here. Markets, I think, are still trying to digest this. So Fed announces no new policy steps aside from continuation of twist, which is nonsense, really. Spiders back to the flat line. And again, it looks like as things go, a little bit of a dip there, but it's more of a non-event than anything. Spiders are now positive, up 3 cents, now down 2 cents. They're fluttering around the flat line. And again, so no new major events from the Federal Reserve. Now we turn our heads towards the ECB tomorrow. All right, on that note, guys, I'm going to head back because I got to trade some of this. There's plenty of money to be made. Come join the Research Center at InTheMoneyStocks.com. 7-day free trial. And by the way, the 7-day free trial, that's the Research Center if you want swing trades, proprietary market guidance, analysis techniques that will make you make money forever. That's where you're going to get it. You're going to get videos every day, daily market reports every day. You're going to get live broadcasts a couple times a week. There's just tons of stuff in that Research Center, and that's where you want to be. If you're more of a day trader, then take the 7-day free trial to the Intraday Stock Chat. Have a great day, guys. Come join us here at InTheMoneyStocks.com.